Hello and welcome to In the Cool of the Day in today's segment of People Connecting People. I'm your host, Ruth Pegeron. I have a special show for you today. My guest is a dedicated home equity retirement specialist with Mutual of Omaha who serves clients across the District of Columbia, Georgia, Maryland, South Carolina, Virginia, Delaware, and West Virginia. His mission is to empower retirees with the knowledge and tools they will need to make informed financial decisions. He is the co-founder of SOS, Superior Options for Seniors, a one-stop shop for addressing the challenges seniors face today. He is a member of the Northern Virginia Mortgage Bankers Association, where he has served as president and treasurer. He stays active and engaged in his community. He's a member of Oakton Pilates, where he regularly participates in classes. Additionally, he's a member of Hidden Creek Country Club in Reston, Virginia, where he plays tennis and golf. Finally, he's a proud family man, married with 3 adult children and 1 grandchild. So please welcome Home Equity Retirement Specialist, Mr. Ernie Castro, to the show today. Thank you, Ernie. Thank you for being here.
Well, thank you, Ruth.
Yeah.
It's a pleasure to be a part of your show.
Yeah, well, you're welcome, and I am excited to see that you're so active. How do you get time to work?
I got to stay active, in my line of work. I obviously deal with a lot of older people. I go to visit people in their 80s, even early 90s, and I could see how active these folks are. They do 9 or 10 things.
Yes.
And I'm like, God, I'm only in my 60s. I feel like a schlub. Right. So I said, I got to pick it up.
You got to pick up the pace.
Yeah, I got to pick up the pace.
Absolutely.
So I'm trying.
We're good. Well, I'm glad. So tell us something else fun that we should know. I mean, you gave us a great intro to you, but anything else we should know about you?
Definitely love to stay active for sure. And let's see, we are building a second home in Lewis, Delaware.
Oh, nice.
And we just kind of contracted on it. We have a home business. It's 52 weeks a year, so we don't get big, long vacations, so we were looking for that little getaway spot. It's going to be a family thing, and it's 6 miles from the beach, but it's a nice
way to get away.
Nice, yeah, and a lot of older, folks are moving that way. There's a lot of building going on.
There.
A lot of building going on. Yeah, it's real nice. We're excited about that.
Well, good. Well, I know you're a native Washingtonian, so that's not too far away from good old Washington, D.C. as well. And you have a grandchild now, so congratulations.
Thank you. Grandchildren.
Oh, you have grandchildren?
Twins.
Twins?
Hey.
Oh, wow.
Once we get started, we don't mess around.
We don't mess around.
And it's a boy and a girl.
Oh, wow.
And their christening is coming up. She's from New Jersey. We'll be going up there in 2 weeks.
Okay, well, wonderful. Well, stay active for
you.
them, if anything else, right?
Will do, for sure.
Yes. Yeah, well, thank you for being here to talk about reverse mortgages. So I'm just going to go right into it. What is a reverse mortgage?
Well, a reverse mortgage, and you saw the home equity conversion mortgage. That's the technical term for it, the HECM. Mm-hmm. But reverse mortgages have been around for, about 35 years. Mm-hmm. And it's a way for homeowners to tap into the equity that they've built up in their homes over all these years, and to use those funds for basically whatever purpose they desire. And there's very common uses. We could pay off an existing mortgage, eliminate your need to make a mortgage payment because there's no payments required with a reverse mortgage. It could be a source of funds for home care. It could be a source of funds to remodel your home for aging in place. It could just provide you with some extra security. There's a line of credit feature that you can draw on throughout your time in the home. So a lot of varied uses. It's grown over the years, a lot of new features that weren't there when the product first came online. So it helps a lot of people, and 90% of the people that are surveyed every year want to remain in the home that they're currently in. And for most people, the home is their largest asset.
Yes.
So I don't see how we can avoid using home equity in many cases. plus the fact that we're living longer, Ruth.
Yes, yes,
You
with
know,
the activity.
Yeah, I mean, 100 is going to be a fairly regular occurrence.
Yes,
From
which is
everything
great.
that we've been looking at and studying, within the next 20 years, you're almost going to be expected to live to close to 100. So.
Just based on just people being more active, number one.
That's right. Diet,
and medicine is changing.
Yep.
Diet, lifestyles are changing
That's
in a lot of
right.
ways. And
That's
I'm
right.
sure the region where people live encourages some of that as well.
It does.
So reverse mortgages are becoming more of an interest for people that are in that category.
Absolutely, absolutely. It cannot be ignored. When I first started 18 years ago, I would walk into financial planner offices and they would kind of show me the door. Hey, my clients are well off. They don't need a reverse mortgage, but nice to meet you.
And that was 18 years ago.
That was 18 years ago. Now, the financial advisors are more, one of my top referral sources because they understand how they can incorporate this into your retirement plan to give you a more successful chance for retirement, because the number one fear in retirement is running out of money.
Yes, running out of money.
Right.
And then there was one other thing you said that I would think that would be probably in the top 5, maybe even 3, would be people want to stay at home.
Exactly.
They don't want to have to move into a new place. They built that home from the ground up, or just lived there a long time.
Got a lot of memories.
Memories. That was going to say memories.
And a lot of people say, I wouldn't know what to do with all this stuff that I have here. So I'm staying here.
Yeah, I'm staying here. And the reverse mortgage helped them stay there and retire comfortably.
That's right.
So that's a great segue into what I was going to ask you also. Who's eligible for a reverse mortgage then?
Well, it is designed for older homeowners. If you're a married couple, at least one spouse has to be the age of 62.
Okay.
And we do have proprietary, we call them jumbo reverse mortgage products that are designed for homes, valued at about 1.2 million and above. And you can actually be as young as 55 to get one of those.
Okay.
So 62 over, live in your own home as your primary residence, and you qualify.
So you don't have to have one of those reasons in place already, like aging at home, already retired, not working.
Yeah.
Those kind of things don't have, just really is age driven first.
Age driven, right.
And then the other components would layer in.
Right.
After that.
That's right.
Okay, so that's a good conversation. So when they do that, you said they have to live, that has to be their primary residence.
Right.
So does that mean that you can have investment properties or you can have vacation homes?
Absolutely.
That's unlimited, but you have to live in the reverse mortgage home
your primary. That's right. It has to be your primary residence. You can own multiple homes. That's fine. I've had several clients that own 4, 5, 6 homes. You can only have one reverse mortgage at a time, so it has to be on your primary residence. And if, let's say you spend half the year in Florida and half the year up here, so it's kind of split, you just have to decide on which home you want to have the reverse mortgage on.
Okay, because that could be your primary.
Right.
You get to choose your primary, as we all know that. Okay,
Mm-hmm.
perfect. So with that, do I still pay taxes with the reverse mortgage? How does property tax work?
Well, yes, the short answer in Fairfax County, if you just got your tax bill, you're like, oh, darn.
Right.
You do not have to make monthly principal and interest payments.
Okay.
So if you have a $2,000 a month mortgage with your principal, interest, taxes, and insurance included, and they escrow $500 a month for taxes and insurance, we can relieve you of that $1,500 a month principal and interest payment. The reason why is the individual is not personally liable on this loan. So we use the home as the asset that we lend on, and we have to protect that asset. So one, you don't pay your taxes for 4 or 5 years, somebody's going to knock on your door and say, hey, you owe us 12 grand.
Right.
And they can sell the house out from under you. So the lender has to be protected by you paying your taxes, and you obviously have to have homeowners insurance. That's true of any mortgage.
That's any mortgage anywhere,
any mortgage, yeah.
So you have to maintain those things.
Yeah.
But you would help them. A reverse mortgage would still have all that outlined.
We can escrow those costs for you and just make the payments, and then you don't have any payments to worry about. Yeah.
Okay.
People opt for that. Sure.
Good. Okay, that's awesome. And then if I did a reverse mortgage, so do I still own my home, or just does the bank own your home and I'm renting back, or how does that?
That is the number one common fallacy of people with regard to reverse mortgages. Those are terrible. The bank is going to own your home. That is 100% untrue.
Okay.
You never give up title to your home with the reverse mortgage. You always remain on title. It's a mortgage loan, and there's going to be a lien on your property, just like if you had a regular mortgage, there's a mortgage lien on your property.
Right.
And when it's time to pay the loan back, whatever is accumulated monies, interest, and everything, that's your loan balance. So if you have a $1.2 million home and the loan becomes due and payable, you've passed away, and the balance on your reverse mortgage is $500,000, that $700,000 in equity remains with your estate or your heirs.
Is there like a mortgage time limit? You can get a 30-year mortgage, a 15-year mortgage, or is it just what you said? You pass away, and then it ends.
The loan. There's no time limit on it. You can get one at 62 and live to be 110. You're fine.
Okay.
There is in the paperwork, I don't know if this is because of lawyers, I always laugh at this one. It says the loan will become due and payable on your 150th birthday.
Oh, wow.
So,
150th
yeah,
birthday. They're
it.
kind.
Yeah, they're kind.
Yes. But to your earlier point, people are living to 100. So they probably had to be a little bit more exaggerative, but they probably had to do that for that reason.
Right.
Yeah, to make sure that. So how much money, is there money or is a person eligible for in a reverse mortgage? Like, does it have a cap, or? I know you mentioned 1.2 for jumbo.
Yeah, on the government-backed program, which is administered by HUD, backed by FHA, the most common reverse mortgage by far. We calculate how much you're eligible for based on your age, the current interest rates, and the value of the home. HUD has a calculator. We plug those numbers into the calculator, and that gives us the amount of your home's value that you're eligible for. Age is probably the most important factor. The older you are, the higher percentage of your home's value you'll be eligible for, obviously.
Right.
You have a shorter expected lifespan. But interest rates are important too. The interest rates are a little high right now, and when they drop, as they go down, your percentage goes up. So if we get some lower interest rates later in the year, I can be talking to my clients about getting a little more money out of their house. Yeah.
Awesome. Well, thank you for that. Well, it's that time for a short break. We will return after these important messages.
Imagine a time when no one person has Parkinson's disease, is debilitated by a stroke, and no family suffers the tragedy of Alzheimer's. Some of the best minds in America are doing more than imagining. The American Brain Foundation is seeking to find cures, where life without brain disease isn't just something we can imagine, it's something we can know. Help us get there.
Welcome back. You are watching In the Cool of the Day, in today's segment of People Connecting People with my special guest, Home Equity Retirement Specialist Ernie Castro. So prior to the break, we were having a lot of talk about interest rates and how this all works. So I just want to continue with that a little bit, because money and cost are important, and everything needs to be very transparent. And that's what, it sounds like reverse mortgages kind of got people get a little confused about the misconceptions and things like that.
Right.
So transparency is great. So let's continue with cost. What other costs or fees are associated with a reverse mortgage that people could expect?
Hey, before we get into that,
Okay.
You mentioned misconceptions, and I'm going to address that. There's kind of a negative connotation as far as reverse mortgages are concerned, and it's basically for this reason. They went into effect in the late 80s. So I think Ronald Reagan signed it into effect. But the loan was not regulated by HUD or FHA for the first 11 years they were around, till the year 2000. So lenders were doing all sorts of unscrupulous things. And that's, I think, where you're just selling your home to the bank, because they had something like, it's called an appreciation clause. You get the reverse mortgage, your home was appraised for $200,000. 7 years later, you want to move and it's worth $500,000. You think, hey, I'm going to have all this extra equity. But they didn't disclose that the appreciation that the home experienced, 50, 75, sometimes 100% of it went to the lender, not the homeowner.
Not the homeowner.
So basically, you were selling your home to the bank. So that's where that came from. HUD, FHA stepped in. That is no longer ever going to be a practice. So
or a possibility.
Or a possibility.
Right,
so this loan is so much more safer now. And people go, okay, Ernie, this sounds good. I don't have to make payments. I retain ownership. What's the drawback? There's got to be a catch. I said, there's really not a catch. I said, the loan is a bit of an expensive loan to get into because the loans are federally insured. What do I mean by that? The lender does not know how long the borrower is going to be in the loan. Now, you get a 30-year loan, it's a 30-year loan.
Right.
15-year loan, 15 years. So the lender doesn't know what the final balance will be, what the value of the home will be, what's going to happen with interest rates. So in the case when the loan becomes due and payable, you're no longer living there as your primary residence, and the balance has grown higher than what the home is worth, the insurance steps in and will pay that gap.
That gap.
Pay that gap. So borrowers would never be leaving a debt of any kind to their heirs or to their estate, okay? So that you have that peace of mind.
That is a peace of mind.
And that is 2% of your appraised value. So if you appraise at $500,000, you have a 10% upfront cost. There's an origination fee. There's a little wiggle room on that. HUD capped it at $6,000. And then there's your other refinance fees, recordation taxes, appraisal, title fees, all that all rolled in. So, it can get a little hefty, but, anything, if you were going to sell your home, you have to pay real estate agents, sometimes 5% of the value. So, there's a cost involved in anything.
And you have closing costs.
Yeah.
You have a lot of different costs even with that. So, just to do any type of mortgage, I think there's
transactions. There's transaction costs. Exactly.
Right, just to get it done.
Yeah.
And that's everywhere.
That's everywhere.
Yeah. So that's just normal part of, just the process that you have to have too.
I will say, the jumbo product, which we have a wonderful product.
55.
55 and over, and mostly designed for higher value homes.
Like over $1 million.
They're not federally insured because they're proprietary products to the lenders. So you don't pay a 2% upfront, mortgage fee. So sometimes those could be appropriate in certain cases. So it's nice to have that option for folks.
Options are good.
Yep.
Yeah,
definitely.
it really is. May I ask you, you said 18 years ago you started.
That's right.
Were you in another type of mortgage before that, or did you just find this so helpful to people, and what inspired you to make this your profession?
I'll tell you, I grew up, my mother was Italian. We had Italian restaurants. So for 30 years I was in the restaurant business. As a matter of fact, we were in this studio. My mother did a cooking show from here for many, many years ago. But, she passed at 88, and the name of the restaurant, coincided with my mom's name. She was not around. I sold it. So now I'm like, now what am I going to do?
Right.
So I got into the mortgage business. A couple of my acquaintances said, you'd be good in the mortgage business. So I was on the forward side. A relative of mine came over to visit and said, hey, you're in the mortgage business? Yeah, I am. I'm looking into a reverse mortgage. Can you help me? I'm like, a reverse mortgage, what is that? I didn't even know what it was.
You didn't know what it was.
So I investigated. She was over in Annandale. I took her to, it was Wells Fargo. They were doing reverse mortgages then, had an Annandale office. She she just lost her job, so she lost her income from the job. She just had Social Security, and her condo costs and everything. I did the calculation. She had like $120 a month in
Extra.
disposable income.
Oh, wow.
Just to get all our other
Just to
stuff
get
on.
yeah.
So we looked in the reverse mortgage. The gentleman said, well, if you appraise at this number, we can get you additional money every month. How much? Tax-free. How much would that be? $1,900.
Oh.
And she had a $300 a month mortgage payment. So she did the reverse mortgage, paid off the mortgage, saved that $300 plus her $1,900 coming in. It was an extra boon, $2,200 to her monthly cash flow.
Wow, and which was well needed.
She closed. I didn't see her for about a month. The next time I saw her when she came to our house, she looked 10 years younger. That stress was gone. So
yes.
I said, hey, this is a pretty nice product.
Yeah, and that is a nice thing.
Yeah.
And you can see somebody actually get a result from it that
Exactly.
impact them personally.
Right.
That's awesome.
Nothing wrong with regular mortgages, but you refinance someone, you save them $300 a month. Okay,
Right.
it's nice.
It's nice.
But these can be life-changing.
Right. Yeah, awesome. Thank you for that. Thank you for sharing that. I appreciate that. Can I buy a home if I'm already into a reverse mortgage and if she decided to move, that same example, would she be able to go buy a new home? Or
there's two things. I actually am working on a loan. This home is going to be valued at around $8 million. It's obviously a jumbo product, and he's going to be able to access about $4.5 million. He's got some business things he's got to take care of, but let's say you were a real estate investor.
Right.
He could buy 4 $1 million homes, no mortgage. He wouldn't have a mortgage payment on his existing home, and he could just rent and do that. So you can. So you can take one of the options of taking the money is a lump sum. You could use that, and
invest in
buy a little condo at the beach or something. And there is a reverse for purchase product. So it's an equivalent of, there's only 2 ways to have no mortgage payment in your retirement years. One, you buy a new home, pay all cash.
Right.
Or you do the reverse for purchase. The reverse for purchase can supply, a certain percentage of the home's value. So you sell your home, you have all this cash, you want to buy another home, but you want to keep some of the extra cash, or you want to upgrade. Let's say you have a $500,000 home, you qualify for $200,000 in the reverse for purchase. You have that, you bring $300,000 to the table when you purchase the home. So you still have $200,000 that you can utilize for other items.
Right.
It's a product that's gaining steam. More and more realtors are looking into it. So yes, you can certainly buy a home with a reverse mortgage.
Wow, that's good to know, because you might say, hey, I want to do something else.
Sure.
And you just said that you get the cash proceeds, so
Yeah,
that would be.
You could do all cash. There's several ways. Let's say you're just staying in your home. You can take a lump sum cash payment. You can keep all the monies in a line of credit, because that's a wonderful feature of the reverse mortgage. The line of credit has a growth factor attached to it. Right now, it's currently around 7%.
Oh,
So,
pretty good.
you start out with a $100,000 line of credit. You don't touch it for a year. You're going to have about $107,000, $108,000 at the end, and that keeps growing. And so that's a feature that no other line of credit that I know of has that.
Right.
Or you can get the monthly payments like we discussed. All the proceeds from the reverse mortgage are tax-free. Don't have to report them on any tax forms. Doesn't affect Medicare. Doesn't affect Social Security. If you're getting real estate tax relief, doesn't affect that. Or you can do a combo. You can take some cash at closing, leave the rest in a line of credit, get a certain amount every month, leave the rest in a line of credit. So it's very flexible.
Very flexible.
Yeah.
So when is the money to be repaid, or when is it due?
It's due when you're no longer living in the home as your primary residence.
Okay.
So if you have a couple, and let's say one passes away, the surviving spouse can stay in the home under the terms of the reverse mortgage, no problem. It's only when neither one of them is living there. They've either sold the home, they've both passed away, Or let's say there's a surviving spouse and that person has to go to a
Nursing
assisted
home or
living,
something, right.
full time, can't
Right.
return home. That's when it becomes due and payable. And the heirs, the estate, whoever's helping out, they have 6 months from the date of passing, let's say, to either refinance it, keep the home in the name of the family, or put it up for sale, pay off the reverse mortgage with the proceeds, and keep the rest.
Okay.
Yeah.
So that's pretty. That part is pretty.
It's
Pretty
nice, yeah.
cut-
HUD,
Right.
HUD doesn't want your home.
Right.
They don't want that hassle. And let's say it's a slow real estate market, and you've got it priced nicely, but maybe interest rates are too high and nobody's buying. HUD will grant you another up to 6 month extension. So you basically have a year.
To make
Yeah,
sure it's
yeah,
resolved once it's not your
So
primary
it's
residence.
it's not, oh gosh, now what? I got to do this. I got to do something
Right.
with this house right now. No, you can take your time
Okay.
and make a rational decision.
Right.
Yeah.
That's keyword, rational. Yeah, so that was good. And then who will help with the process of all of this? If they decide on that. I mean, because you mentioned that every realtor doesn't do reverse mortgages. Like
Right.
you were not thinking about reverse
That's
mortgage. You
right,
didn't know
that's
nothing
right.
about it. So it sounds
So-
like,
You have to find a licensed reverse mortgage specialist in your area.
okay.
And
Yes, who
that
would-
person has been trained. We're licensed, through the NMLS, just like all the other loan officers, and we get state accreditation too. So anyone in this profession can help you from start to finish and then beyond. I have people that call me, months after they close and years after they close, and have questions. So
Right.
I'm available.
Got
And
it.
so will
You need a
everybody else.
professional, right?
Yeah.
So that's the key, is that it has to be a professional, somebody that's a professional in this product.
I would recommend that,
Right,
because there's
versus-
some, if you just do one of these once in a while, you might not know all the
All
nuances.
the nuances,
Yeah,
right? So get a specialist.
right.
Well, that's great, Ernie. Thank you so much. It's been
Man.
awesome talking to you, and I think I'm now well versed on this. So it's about that time again. If you have any questions about today's segment, please see the information scrolling below. You have been watching In the Cool of the Day and today's segment of People Connecting People. Thanks for watching, and bye-bye. See you next time.